Now, after uproar, the removal of indexation benefits on the sale of properties, the central government has relaxed new property tax rules it had proposed just 2 weeks ago. The government has proposed new amendments to the Finance Bill 2024 with the aim to provide relief to taxpayers who bought houses or real estate before July 23rd this year by giving them the option to choose between two rates for long-term capital gains tax. The Union Budget had earlier proposed lowering the LTCG from 20% to 12.5%, but dropped a benefit that allows individuals to adjust prices for inflation before the capital gain tax was calculated. Now, that's known as indexation. Now, the government is offering taxpayers an option of using the new rate or the previous 20% rate with the inflation adjustment. The change comes after criticism from opposition parties that the Prime Minister's first budget since being re-elected was aimed at increasing the tax burden to an already heavy financial burden on the middle class. Before I go across to my guests, let me just simplify this for our viewers. Suppose you bought a flat in 2015 for 60 lakhs and you have decided to now sell it for 1 crore, which is 100 lakhs essentially. So you have made a capital gain of 40 lakhs. Now you have two options. You can either pay a 12.5% flat tax on these 40 lakhs, which comes down to 5 lakhs as tax, or you can go for 20% with indexation. Now, indexation means you will now include the cost of living and other appreciation factors into it. So then if your flat's appreciated value or indexed value in turn in line with latest inflation figures is then calculated to 80 lakhs and you have sold it for 1 crore, that means your gains will then be at 20 lakhs and then you will have to pay 20% tax of those 20 lakhs, which comes to 4 lakhs. So by one method, you get 5 lakhs. According to the new regime, you have to pay 5 lakhs of tax. By the older regime, you get to pay 4 lakhs of tax. Now, this is, of course, one case. Figures differ in terms of, obviously, when you bought your property, when you're selling the property, what is the appreciated value and so on. But this is how these two regimes will operate here. And that's very similar, in fact, to what the old tax and the new tax regimes apply to when it comes to income taxpayers. To put this in further context, in further detail, I'm being joined by my guest, Kaushal Kumbat, MD Urbana Group, Mitali Nikor, Senior Economist and founder of Nikor Associates, and Ankit Jain, tax expert and partner with Wade Jain and Associates as well. Thank you so much for joining me at this point with your views. I'll first off start with Mitali Nikor. Mitali, there are two ways to read this. One is that this is, of course, a climb down by the Finance Ministry, which generally reflects the fact that doesn't really aspire a lot of confidence in the other measures proposed in the budget. The other way to look at it also is the fact that, of course, there is some sort of a feedback, at least some sort of reception to the feedback which came in, and it was overwhelmingly negative to this particular provision within the union budget.
No, absolutely. On the day of the budget, we were doing a lot of analysis, a number of budget commentators alongside myself, and even behind the scenes, when we are waiting for the shots to be taken, all of us were discussing that a number of, budget commentators were actually not taking a stand on this issue because everyone felt that we all needed to go to the drawing board and actually work out the scenarios. At which point is it going to be better and at which point is it going to be worse? Exactly like the calculation that you just discussed, that in some scenarios, one regime may work out better and in another, it might be the latter. This depends on two very important criteria. The first is how much is the inflation rate, right? Because at the end of the day, if your inflation rate is very high, then the new regime is not going to be in favor. It's actually going to be better to have the indexation benefit because if your inflation rate is higher, your indexation benefit will obviously work in your favor. The second is how far back did you purchase the property? Because again, if you purchase the property more than 20 or 25 years ago, then the indexation benefit will be very high for you and it will be like leaving a lot of that benefit on the table. So with this, I think a number of petitions were made so that we could have the choice. And of course, in a market where we are trying to bring in more and more formalization, more and more transactions to happen in a transparent manner, this move by the government, it is being realized that this move by the government will really help, in trying to bring that in place.
That's a fair point as well. Let me also bring in at this point Ankit Jain, tax expert at this point. Ankit, Does this make it simpler on face of it? Yes, it brings in an added complication because just like personal tax, now there is an old tax regime or there's a new regime as well. But in terms of the overall benefit, I suppose choice is always a good thing for the common man. Ankit, I think network issues are prohibiting us from listening to you properly, and we'll try and restore that connection with you and come back to you. But let me also now bring in Kaushal Kumbath, MD of the Urbana Group. Kaushal, this was a much needed impetus to the real estate sector here because the sector is going through a boom right now, and a lot of people had reacted quite adversely when this new proposal had come in this union budget.
Absolutely, Ritangshu. When this was announced on the 23rd of July, it came as a bit of a dampener for the real estate sector, which after a long time, we were in the doldrums for almost 7-8 years. And it's only over the last 2 years or 3 years that the sector has sort of been on the path of revival again. This acted as a big dampener.
Yeah.
So it's good that the finance ministry has listened to the feedback that was coming in from all sectors, particularly from the real estate sector. Having said that, the amendment that has been proposed is still half-hearted in the sense that it only provides for indexation to individuals and HUFs. A large part of commercial real estate, for example, is bought by corporates. This benefit is not available to corporates, it's not available to partnerships, to NRIs. So it's not been restored for all classes of investors or all classes of property holders. It is only for individuals and HUFs that this indexation benefit with the 12.5% tax is allowed. For all other categories of property holders, whether it is corporates or partnerships, it still continues to be 20% without 12.5% without indexation benefits. So that is still an area of concern, particularly for commercial real estate. You see, offices built to suit leases, warehouses, etc., are mostly held by corporates, not by individuals, because the quantum of investment is large.
Yes.
And this benefit has not been extended to them.
Okay, so Kaushal, you're pointing out that this is a step in the right direction, but not a complete step if really justice and parity has to be achieved. Hold on to that thought. Let me also get back Ankit Jain before I continue building on that sort of point which you've raised, Kaushal. Ankit Jain, I'm sorry for network issues which had interrupted your point earlier, but please go ahead. I hope we can hear you loud and clear now.
Yeah, so I was just sharing that the intent of the government, to reduce the tax rate is always to bring in more money in circulation and to promote. One of the biggest reasons to lower the tax rate is the fact that the government wants people to do more transaction in full, correct, and not in cash transactions. So reduce the amount of cash transactions they want. The focus has to be. So the intent was there, but yes, at the same time, this removal of indexation benefit has had a difficult challenge for the middle class, especially for people who are living in their own houses. As you rightly pointed out, people who have held the property for a shorter period, these are people who are investors who buy property for a period of 3, 4, 5 years and then sell it off. They make significant amount of gains, and on that gains, the amount, if the lower rate is applicable, then they will be beneficial. But for people who had been living in this property for 10 years, 20 years, maybe even longer, this becomes a big challenge because they lose out on the indexation benefit. To give you an example, over a period, inflation adjustment used to be 5.5%. And what a general analysis of real estate is that we get a gain of almost 8 to 9% averaged out over a long-term period. So for those people who are holding property for a long period of time, it was a little lossy situation. And the government, a lot of petitions were filed with the government. Everybody was saying that for those people, it is this proposal does not make sense. So to even those out, this has been done. And I think it's a good step for the people, and it is something which will be very beneficial. At the same time, I hope that this does not push the government to change the new structure that they have to augment the revenues or to focus on the revenue. That regime should not be done away with by increasing the long-term capital gain rates or by changing it altogether, because that destabilizes the confidence of the taxpayer in the tax regime.
That is a very important point. So you've mentioned both the pros and cons of this move, and or at least the potential pitfalls. The big takeaway I can get, Ankit Jain, correct me on that, is that more choice is always a good thing, especially when it, for instance, when it comes to personal tax. If your income is around a 10, 12 lakh an annum or below, then you have the choice of going in for the new tax. If your income is more than 15 lakh, you go for the old tax regime. Similarly, having choice in this aspect also benefits one set of tax regimes for those who have had ancestral properties for a longer time looking to sell, and another set of rules, another tax regime also for those who are looking at property as an investment, buying it and then getting returns on it as well. Is that your summation, Ankit Jain, essentially that more choice, while it might be confusing, is ultimately reaching out to a wider spectrum of people beneficiary?
So yes, more choice is always beneficial, and I would say it's not going to be like there is an additional step that is now required. Now you would not just be relying on the old calculation. The old regime had been in play for almost 30-40 years, and it was very much part of everybody's DNA as of now. Even like any person who was not a very who's not very well versed with tax provision would know how the property sale purchase, what the taxation is, what are the tax rate. That was very well versed. Be it any broker, seller, buyer, they were very well aware of that. But at the same time, the new regime offers a lower tax rate for, especially for those people who have recently who have had significant gains in a short period of time. I've been talking about, like, if I can take example of Gurgaon. Gurgaon has seen significant rise in prices in the last 3-4 years. Yes. And any person who wants to exit or to book profit on this and to make sale, he would be having a benefit of both the regimes, whichever is more beneficial. And so in that case, of course, there is slightly more complication, but it is better for the taxpayer.
All right, let me go back to Mithali at this point. Mithali, the point which Mr. Kumbhat was mentioning is that this seems to be half-hearted in effort that, yes, there's a correction which has been brought in, but that's only for individual sellers, not for corporates, and not for the rest of the spectrum as well. Once again, I come back to the original point here. Does it augur well for a rollback to come in just 2 weeks after a massive budget has come out? Because that indicates that perhaps enough homework was not done before coming up with such a landmark proposal in the first place.
No, absolutely. I agree with you, Ritangshu, that, there should have been more consultations. I mean, a lot of ministries in the run-up to the budget have consultations with number of experts. And, I myself have been part of many of such consultations, especially with the Ministry of Women and Child Development and other, social sector ministries. So we are always called in and we are asked for our opinions, from an expert point of view. And definitely that's something that I'm sure would have been done in the finance ministry. Perhaps more rounds of such discussions were required, particularly with the real estate industry representatives, and that would have made a lot of difference. I think just reacting to the point about the tax rates and the overall situation when we look at taxation in this country is around expanding the tax base. At this point in time, we are trying to find ways to expand the tax base across sectors, and real estate is no exception.
Yeah.
So, I do agree with the finance ministry's move to only provide this exemption for individuals, because at the end of the day, when it comes to commercial properties, when it comes to commercial investments, there is a need to expand the tax base over there. Yes, it does hurt the sector in the short term, but I do believe that the resilience of the real estate sector and the overall real economic growth which is taking place, not only in Gurgaon, but when you look at Hyderabad, when you look at Bombay, when you look at Bangalore, all of these urban centers are growing. And I do think that, this tax change, they can withstand it.
All right. Kaushal Kumar, I'll come to you for the final word before I move on this debate. Does this in any way address the larger concern which has been the ugly secret which has been in the real estate sector for years now, is that most transactions in real estate are essentially done in black. If a property is being sold for 80 lakhs when it was bought at 60 lakhs, these transactions are then sold at 60 lakhs and the 20 lakhs is taken in black so that people avoid paying LTCG. That still remains a concern which is unaddressed in the sector.
Ritangshu, I think over a period of last 5-7 years, a lot has happened towards formalization of the real estate sector, and increasingly, full check value transactions have become the norm. This indexation withdrawal, however, is probably going to be counterproductive to that, though. Because like you rightly pointed out, nobody wants to pay more taxes on something that they have, let's say, for example, inherited or hold for maybe 25 or 30 years. So there could be a possibility of an increase in cash transactions within this sector, which is counterproductive completely to the kind of culture that we've tried to build up over the last 5-7 years of formalization of the sector.
All right. We'll move on. We'll leave it at that and we'll move on. But thank you so much, Kaushal Kumbhat, Mithali Nikor, and also Ankit Jain for joining us with your views. It's a complicated issue, but it's very important for a lot of our viewers in terms of how this impacts their future planning and the decisions to deal with their assets as well.